Happy National Jessica Day.
Happy National Jessica Day to you too. It's great to be a Jessica.
Yes, and all of our Jessica-ness. It was actually February 25th, but we'll just pretend that that's what today is. So, serious question though. If Warren Buffett was your grandpa, do you think he'd give the best birthday gifts or just write you a check and tell you to put in an index fund?
Oh, 100% index fund. Or maybe his own fund though,
Yeah.
But then if he was your grandpa, you'd probably have a trust fund.
True.
But either way, compound interest is a great present.
It is a great present. And since we can't have good old Grampy Buffett as our personal finance grandpa, we can at least learn from his latest shareholder letter that I know a lot of people are interested in. So today we're breaking down what the Oracle of Omaha is up to, including the insane amount of cash he's sitting on, which stocks he's selling, and how Berkshire Hathaway keeps beating the market. Basically, we're learning from one of the best investors of all time, so stick around after this intro music.
Ding, 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 ding. It's the market bell.
You're listening to Market MakeHer, the self-directed investing education podcast that breaks down complex financial topics from her perspective. That's us. We're her. No finance bros here, just your finance sisters, or as TikTok likes to call Jess, your fin mom.
That's right. I'm not your finance friend. Not your sister either. I'm your mother. AKA Jessica and Skip. Anyways, I really am a mother. I was really, really, really so against the word in the title fin mom that TikTok has given me. But as a mother, you raise your children to grow up independently and be on their own without you. So really it's fitting.
Yeah, I think it's fitting.
We're raising you to
and
grow
you're a
up.
great mom.
Yeah.
To us all.
Oh, thank you. I appreciate that. I have worked in finance for about 15 years in the self-directed investing space from Scottrade, Fidelity, Merrill, and I'm on CNBC, Fox Business, Yahoo Finance, the Schwab Network, and Bloomberg, breaking down the markets.
And don't worry, I'll be y'all's finance friend and make sure we all comprehend FinMom's valuable lessons.
Yes, so nice of you, Jesse. It's a lesson I learned when we started this podcast. I speak a foreign language, and Jesse makes sure it's understandable. So together, we have our mission.
That's right. Just do my witchy part to help us all learn how to make our money make money. I'm Jessie Desnuit, your beginner investor extraordinaire, asking all the questions you are probably thinking, and then some. If investing is a puzzle, I'm out here trying to put the pieces together, one earnings report at a time.
Ooh, I like that, because we do put the puzzle together. And today, we're going through Warren Buffett's 2025 shareholder letter. He gives a letter to his shareholders every year. He shares some experiences, how he feels about the market, acknowledges his mistakes even. So here's what we're going to cover. A little talk about Warren Buffett. Who is he? Why investors care? Why we should care. The massive amount of cash that he's holding and why that matters. I see that all over TikTok or social media where people are saying, oh no, Warren Buffett is selling, or these big fund managers or these big insiders are selling shares. That means something's going crazy. Yeah. That's not necessarily true. Let's talk about what that means.
Yeah.
And we'll talk about his portfolio, he's buying, what he's selling, and Berkshire Hathaway has been beating the market for decades. We should talk about that. You know, that also common misconception around social media. You can't beat the market. Well, Berkshire Hathaway does.
You can if you're Berkshire Hathaway or Warren Buffett. All right. So before we get into the juicy stuff, let's give Warren Buffett the proper intro he deserves. Jess, who is this man and why does the finance world treat his letters like gospel?
So Warren Buffett is the chairman and CEO of Berkshire Hathaway, and he is widely considered one of the greatest investors of all time. He follows very simple, long-term investment philosophies. He buys good companies at good prices. He likes to think about things being undervalued. Even when he buys back his own stock, he wants to make sure it's undervalued. Yes, he holds them a very long time and believes in the power of compound interest. But when I say he looks at the value of a company, he goes down to understanding management, understanding expenses down to how many paper towels they get. Like he gets into the details. It's the little things, isn't it?
Sounds so easy until, I realize most people do panic sell when the stocks drop 5%. So the fact that he doesn't do that and that's his strategy, that says something.
Yeah, it does. He mastered patience. And I really feel like this next generation does a much better job of that. Not selling and being emotional, but Warren Buffett's 94 years old. He doesn't represent the new
True.
generation. He's arguably the oldest alive,
the oldest
you
of the
know?
old school, the OG.
Right.
I read that he's a big believer in buying businesses, not stocks, meaning he invests in companies he truly believes in, which of course not everyone can do. But it seems to have gotten him pretty far. Seems like he knows the recipe to success. So I'm guessing this is why his annual shareholder letters are such a big deal, right?
Yeah, absolutely. Every year he writes this letter, and it's like your roadmap. We get our macro overview from all of these big institutional research firms that survey fund managers. Berkshire does his own. It's 15 pages long, includes the performance of his fund versus the S&P 500 going all the way back to 1964. It shows his investing principles, how he's positioning, how he feels about the economy. We pay attention because his track record speaks for itself. It beats the market. He is the master capital allocator.
Well, then let's get started on this discussion of his letter by talking about the absurd amount of cash Berkshire Hathaway is sitting on. So how much money are we talking? Because everyone's been talking about this.
They have. So as of his 2025 letter, a record breaking $334.2 billion in cash and cash equivalents, short-term treasury.
Like that's billion with a B. That's like Scrooge McDuck levels of money. Why is he hoarding so much cash?
Yeah, so there's a couple reasons for this. Remember, he's a capital allocator. He did sell more stocks than he normally has. And this is looking at the entire year of 2024. One, the fund has performed incredibly well. And when we say, oh, he has more cash, well, he also has higher performance of the constituents or the stocks with the companies within his portfolio. Should look at that as a ratio of equity versus cash, like almost like you would a portfolio. Meaning that's not as bad as people make it out to be. Two, we have much higher interest rates than we've had in a very long time. I'm talking since the great financial crisis, which means you can yield more by being in cash equivalents, like treasuries, short-term treasuries. And then you can have those set aside since they're shorter term because of an inverted yield curve and wait to deploy your capital when ready. And that's what he's doing.
Yeah, we talked about that a lot last year, how the short-term treasuries, like 2-year or less, were a higher interest rate than the long-term, like 20, 30-year ones, which is not normal. It's not normal that you can like get more return for your money in a shorter time. Usually like you get rewarded for that for keeping it in there way longer. So I guess he's definitely been taking advantage of that. So he's just like chilling, collecting risk-free yield and waiting for the market to crash so he can buy stocks on sale.
Exactly. That is exactly what he's doing. And he says in the beginning of his letter that the fund performed better than he even thought. And that's because of the income that he received from treasuries. He has patience and he waits for those wild swings to the downside, as he likes to call it, or as you like to say, the stock market's on sale. But he can buy companies at a discount when people get emotional and sell, which again doesn't happen as much today, even though market moves a lot more as it has in the past.
The younger generation is definitely learning from the previous ones that have done that. Maybe, people are learning not to do that.
I do mean it goes up and down a lot, less emotional selling.
Yeah, feel like it's not as bad as it used to be. Well, I'm very curious to know what he's been doing with stocks and how that works out with capital gains and taxes for him and whatnot. But I know we're about to get into all of that. So let's get the tea. Which stocks are Mr. Buffett ditching?
Oh, so he sold a lot last year. And it was a lot more than normal. And that's also because he went into cash. But it was $134 billion in net stock sales last year. Massive shift for Berkshire. We don't know every stock. We do know he reduced his exposure to some financial and consumer brands, always makes headlines. He sold some of his Apple shares and then people freak out. But the taxes portion, I think there's such an interesting stat. He, this year, paid more than 5% of American companies in taxes to the U.S. government.
At a time where, the current administration is trying to cut taxes for billionaires, That says something.
It does. And he also notes, please spend responsibly. Like to the U.S. government. I love it.
They will not, but we'll
Let's
find
hope.
out.
But I don't know. Yeah.
I mean, so would he have to report every stock he was selling to the SEC? I assume he's probably an insider on most stocks he owns, but maybe not all. So I'm just wondering if we can find out what all he actually sold somehow and any plans for future selling. Is it possible?
So there's still the Edgar database. And if he's classified as an insider, we did an episode on that.
The insider trading episode, the Martha Stewart
one.
Oh,
yeah, the Martha Stewart way. Yeah, what classified is that? So if he falls under that category, then he has to file it.
His personal portfolio. If he's an insider, like majority owner of certain stocks, he has to do it.
Yeah, he does. If you pull it, there are listen. It's so many. I can't even stop scrolling. But I'm looking how much in the Edgar database.
So their Berkshire Hathaway as a company is reporting to the SEC through the Edgar database. You can find it.
Correct.
Wait, so
Correct.
they're a stock.
Yes.
They are a stock, but they're also a fund?
Well, it's classified as a common stock. I like to think of it as a fund because it kind of acts that way, but it is not classified as a fund.
Okay.
It's a stock.
Okay.
Like it's not an exchange-traded fund or a mutual fund by a fund company.
Interesting.
It's a common stock. Berkshire Hathaway Class A and B are common stocks.
Which we're going to talk about. Okay, well, what is he buying in terms of stocks then?
So interestingly, he increased his stakes in Japanese companies.
Which I guess makes sense.
It does, because we talked about this on the yen carry trade, how Japan was raising rates for their first time.
Yeah, because their interest rates were like, what, 0 forever or just really low forever?
Yeah, they were even negative at one
Wow,
point.
yeah.
Right? They had some inflation, and when inflation happens, that's an indication of growth, but too much growth, too far, too fast, the Fed steps in, and in this case, their central bank, and they started raising rates.
Yeah, wait, Japan has its own Fed, or it's just called, everyone has a central bank. They might call it something different.
Okay. Yeah, everyone has a central bank.
And some, like how it's controlled could be different based on the country, I'm guessing.
Yeah, but those that are more modern economies are very similar.
Okay. So they raised interest rates in Japan. The economy's growing. And because of that, Warren Buffett is seeing growth potential in Japanese companies.
So he increased exposure to that. In this letter, he actually mentions insurance as well, references climate change, which we are all aware of. But he also halted his buybacks too, which I think is very interesting as well.
Wait, what does that mean?
So companies will announce buybacks, as in they're buying back their own stock.
Yeah.
He won't do that, which says that he thinks the stock market's overvalued because he won't pay top dollar. He's saying my stock's even overvalued.
I mean, I can see why he would think that, because we know that people are kind of struggling out here, and there's a lot of job losses, and maybe we're not all getting the raises, or minimum wage isn't raised in all the states here, in America at least. So to see the stock market continuously perform so well when we know the American people are getting all these extra jobs and the gig economy, all these things just to make ends meet. I mean, we don't know what's going to happen, but I feel like it creates a little uncertainty at some point. And we know the market doesn't like that. So maybe it hasn't quite caught up yet. And that's what he's kind of worried about. That's what I'd be worried about.
Well, and he says that in the letter of concern with even an inflation scare.
Yeah.
And the concern that would happen in the economy. This isn't a stock market update episode, but we had a jump in unemployment data today, actually. That was a surprise. And then there's some tariff scares. We started the stock market actually kind of up today and then ended down a lot because of that. Because that's all uncertainty.
Yeah.
So you're so right, Jessie. I love it.
I'm learning.
There are cracks in the economy.
Yeah.
Which I shouldn't be happy about. I'm happy that you are seeing that. It's very scary to me. It's
it is.
Yes.
And also, I mean, we know a lot of government employees are getting laid off, and that's been recent. So that will catch up at some point. I mean, there's just a lot going on right now with the current administration, as we're all aware. So I can see how maybe he's just preemptively trying to play it safe just in case,
He totally artfully said it.
Yeah. Not advice. Okay.
I mean, he sure does give advice. Though.
Yeah,
He
yeah, you
does.
can listen to his advice if you want. That's up to you.
Biggest stakes were Apple, American Express, Coca-Cola, and Moody's.
And Moody's? Why does that sound familiar?
Moody's, because it's a credit rating agency
That's why.
that rates fixed income products.
Is it just auto insurance that's like experiencing the biggest inflation right now, or is it all insurance?
Home insurance is also a big issue, especially in the South.
Interesting. Okay, well, I think we should talk about Berkshire Hathaway for a minute. So if y'all don't know, Berkshire Hathaway Inc. is an American multinational conglomerate holding company. A conglomerate is a large company that owns several businesses that can be across different industries, usually from mergers and acquisitions. So Berkshire Hathaway formed in 1955 by merging two companies together, Hathaway Manufacturing Company and Berkshire Fine Spinning Associates. And it was originally a textile manufacturer, which I did not even know, but transitioned into a conglomerate starting in 1965 under the management of Chairman and CEO, you guessed it, Warren Buffett. Now, a bunch of things happened, and I'm not going to read you the entire Wikipedia article, but let's just note that they acquired a bunch of companies over the years. Now, Buffett personally owns about 38% of the Class A voting shares of Berkshire Hathaway, which I'm guessing would make him an insider. And we do have an insider trading episode 66, that we mentioned if you want to learn more about what that is. But I want to make sure that we also talk about what Class A means in a minute, because that's something I'm not really familiar with. But the last thing I want to call out is that Berkshire Hathaway is often compared to an investment fund, which we kind of talked about, because the annual growth rates of the company is on average 19.8%, compared to a 10.2 annual growth rate for the S&P 500. So you always hear how you can assume a 10% growth rate on the S&P 500, which is why we invested those index funds. So we always talk about that. So in August of 2024, that's August last year, Berkshire Hathaway became the 8th U.S. public company and the first non-technology company to be valued over $1 trillion by market capitalization. Its Class A shares have the highest per share price of any public company in the world because it's opposed to stock splits. And we actually mentioned this in episode 39, what is a stock split, when we were talking about the NVIDIA stock split. And you told me how that Berkshire Hathaway has never done a stock split. So we're bringing all this back around. Okay, so let's first talk about how has the Berkshire Hathaway stock been performing lately?
Well, the Class A shares just hit an all-time high of, get this, $747,485.49 per share.
Yeah, that blows my mind.
I mean, another million.
Over 747,000. That's a lot. And that brings me back to my question. So what is a Class A stock? And does that mean there's a Class B, C, D, E? Like, how many of these classes are there, and why are there classes?
You have different issues. Google has Class A and C, and both are in the S&P 500.
That's right.
Yeah. But yeah, so we can talk about Class A and B specifically for Berkshire Hathaway. And I actually think this is really, really nice as to why it's there. So Berkshire Hathaway Class A, never going to go do a stock split. It is definitely the most expensive stock.
For one share. Like, it's a lot.
One share. These unit trusts were coming into existence. And I believe it was in the 90s. Warren Buffett did not want this unit trust to be formed that essentially basically made a passive type of investment where it would mirror Berkshire Hathaway. Because what comes with that is an expense ratio. And he says that would take advantage of lower income, because it'd be a lower price point, and naive investors. And so he created Berkshire Hathaway Class B at a much lower price point so it could be affordable to everyday investors. And I think that's
that's nice.
Actually really great. Yeah, it is nice.
Seems like he cares.
He does. He does, He actually really does. I mean, I suppose if Class B gets too high, it could issue a Class C. Same thing.
So then there's a Class B. So the ticker symbol is BRK period A for Class A. Is that how that works?
Actually, this is a good question. It depends on your brokerage firm. So we've never talked about this. Every stock has a symbol or a ticker, as people like to call it. They also have something called a CUSIP number,
Oh.
which is like their social security number. So symbols methodology varies from broker to broker, as in some will be BRK.A, others will be BRK/A.
Oh, really?
Yes.
Each stock has a like kind of this social security kind of number or whatever attached to it. And that's the defining way to know what the stock is, not the ticker symbol, because the ticker symbol can be different based on a brokerage firm.
Well, no, ticker symbols are like AAPL is Apple at every single brokerage firm. It's just the weird little nuances when you get into different classes or you get into preferred stocks and you get into this other, anything that's outside of a normal common stock can be really
But isn't
difficult.
BRKB, the class B, a common stock?
It is a common stock, but since it's .B or /B or .A or / that's all.
It's just the way
try
it
a dot
looks.
or a slash.
Okay.
Yeah, or you start typing it and it should just show up.
Okay.
You don't need to know the CUSIP number.
No.
You only needed that like back in the day when there were stock certificates. So
we were writing on papers before we got digital.
Yeah.
Okay.
Yes. But it stands for Committee on Uniform Security Identification Procedures. That's CUSIP.
It's an acronym. Got it.
Yeah. Yes. Okay.
So going back to that number, that 747,000-ish per share, like over that for the Class A stock. Who is out here buying a single share of BRKA.A/A, whatever, the Class A stock? Who's buying one share for 747,000 or over?
You know, that's a great question that I wasn't prepared for. But you know what? I could look up who the biggest shareholder is right now.
I'm curious.
Let's do it. But immediately what came to mind was people who are flashy. You know, like I gotta have the nicest roll.
Yeah. Brokerage firms. What do you call it when it's like institutional investors? No?
Yes. Yeah, that's what I was thinking. But let me see. Well, 74% is institutionally owned. So you hit the nail on the head. But who? M&T Bank Corp owns 53%. FMR LLC owns 6%. FMR is Fidelity.
The average investor is buying these Class A shares for that much money per share. Institutional investors basically are, which are like the big companies that have the big funds and stuff, right? Like mutual funds and things.
Yes, and there is exposure to Berkshire Hathaway in funds, and it's in the S&P 500.
Okay.
So it has to be in
Class
index
A
funds
one
as well.
is in the S&P 500?
Actually, only Berkshire Hathaway Class B is in the S&P 500.
Oh, okay.
Not A. Yeah, which I think is interesting because both Google Class A and C are in the S&P 500.
Yeah, I only ever saw it with Alphabet Google. So I didn't know that Berkshire Hathaway had an A and B. And so basically, is that done? Is it always done to make one more affordable, or they have different, or is it just because, I don't know, can there be multiple reasons to have a Class A and Class B stock?
Absolutely. They vary. With Google, it has to do with voting rights.
Oh, I think you mentioned that before. So one has voting rights and one doesn't?
Yes.
I thought all stocks, if you bought a share of stock, you had voting rights.
Yeah, Class C has no voting rights.
Okay, so Google, Alphabet, Google, whatever, has a Class A, B, and C, but Class C has no voting rights.
Their Class B shares are only held by founders, and they are not publicly traded. And then Class C is used primarily for equity compensation for their employees.
That makes sense, too. Okay, I can see why they would do that. Yeah. But they don't want the employees to have voting rights?
Yeah, which I think is interesting.
Yeah, very interesting.
They have an ownership stake, but ownership without voting right.
That's
another. I know. There's so many rabbit holes today we could
go down today.
Yeah.
Well, so Class A of Berkshire Hathaway stock is super expensive, and not the average person is able to buy that. But Class B is a lot less expensive, or like a less cost per share, I should say. So it is more affordable, but it's also in the S&P 500. So if you're in an index fund that mirrors the S&P 500, you are already investing in it.
Correct.
And now Berkshire Hathaway, we said, beats the market, right?
Correct. Yes.
I actually did look at the Class A stock quote. the other day and saw that it had a beta, looking at the 5-year performance monthly, it had a beta of 0.88, which means it is less volatile than the S&P 500. And that must be why they're compared to an investment fund, right?
Well, yeah, I think it's compared to investment fund because it has a bunch of companies in it.
Because Berkshire Hathaway, like we said, is a conglomerate. So they like have a ton of mergers and acquisitions. Like they've acquired a bunch of companies over the years. So like them being the stock, like they kind of technically are a bunch of companies. Is that why?
Yeah. But it is classified as a common stock, like in the classification system.
And it's not technology.
Correct. Right. Their gains, though, they don't always beat the market. Not always, but compounded. You go from 1965 to 2024, Berkshire is at 19.9%, whereas the S&P 500 is at 10.4%.
Yeah, that's pretty good.
And they beat the market last year by 0.5%.
Okay. Well, it seems like Warren Buffett really knows what's going on. He knows his stuff. He has a pretty good like pulse on everything. I guess that's why he is the GOAT investor that he is. But let's do a little recap. Warren Buffett is holding a ton of cash, selling off billions in stock, waiting for a downturn, and still somehow managing to beat the market. And he's 94.
He is 94. And he's passing the torch this year.
Yeah, so didn't he announce a new CEO as well?
He did. He is handing it over to Greg Abel.
Did he assure everyone that like this new person will be a mini version of him, gonna carry on the same management, the same everything, has been properly trained or whatever?
Yeah, he reiterated his commitment to transparency and long-term thinking. At the beginning of this letter, he started with transparency. It's very well written, acknowledging mistakes and honest reporting. He talks about successes. He talks about failures as well. But one of his philosophies is to correct mistakes quickly rather than delay action, which I think that's what makes him supreme. He acknowledges his mistakes on capital allocation, even managerial hires, even strategic decisions, but he acknowledges them and then he takes action. We prefer that for sure.
That's good management.
Yes, because he thinks if you mislead shareholders, it leads to self-deception.
Yeah. I mean,
which it will.
Shouldn't everyone think that?
Yeah, right?
Why does anyone want to mislead anybody?
Never good. The takeaway, compound interest is king. But you can also still be a capital allocator if you do your homework. Patience, discipline, long-term thinking. It's not as exciting as day trading meme stocks or YOLOing options, but it works.
It does. I mean, you know me, I'm definitely more of a long-term index funds and chill investor girly myself. Index funds and chill shirts available on our website. Shameless plug.
Yes. And there's a goth version.
Yes, there's a goth, metal, the horn, skeleton hand version. If you're a goth finance girly like myself. But yeah, I do feel like we could probably do an episode on Warren Buffett's investment philosophies and strategies in general, because he also got rich by, buying companies. And I'm curious about just his investment strategies in general. Like maybe we need to have a little deep dive into his success story sometime, little book club. I'm sure there's so many books and autobiographies and who knows what about him that I have not personally ever read.
Yeah, we should definitely do that. And actually, I would love to have an episode of quotes or investment philosophies from the greatest investors of all time. Warren Buffett's in there, but there's actually a lot of others that have some really, really great lessons.
That'd be a nice light episode where we don't get super advanced and heavy into our rabbit holes of investing knowledge.
It would so get it. There's still some rabbit holes in there with a couple that I'm thinking of, to be honest.
It's okay. We can't help it.
It's all right. I know. I was going and fell into a rabbit hole and now we're in Wonderland. Ooh.
Yeah, it works on two levels. You got your Taylor Swift in there and, I love Alice in Wonderland. So we'll let it slide.
I'm really glad that you caught that.
And if you have learned something today, please share this podcast with your friends, your fam. Help us in our mission to make everyone fin-fluent with real investing education taught by a real expert in the industry. To me, the person learning along with you.
That's right. Because remember, we found Wonderland. You and I get lost in it. And when you build knowledge,
you break barriers. and Taylor Swift quotes.
Yeah.
Remember, investing involves risk. There is always potential to lose money when investing in securities. MakeHer provides educational content and resources for informational purposes only. We are not registered financial advisors and do not provide personalized investment advice. Any information provided by MakeHer on our website or podcast is not intended to be a substitute for professional financial advice. MakeHer is not liable for any investment decisions made based on our content.